trading. Think about it for a second.
Mm-hmm.
The potential to chart your own course, work from, well, anywhere, build real financial independence.
It's definitely sold as this ultimate freedom, isn't it?
Yeah, exactly. But the reality is the vast majority who step into that arena find lasting success incredibly elusive. We often talk strategies, tools.
But what if the real key isn't out there in the market, but, inside ourselves?
You've absolutely hit on something crucial there.
Well, understanding market mechanics is, of course, you need that foundation. It's a prerequisite.
Sure.
But it's the psychological landscape, really, that often determines who sinks and who swims. Our biases, emotions, habits.
Those are the silent forces.
Yeah, they can propel you or just as easily trip you up. Massively.
Okay, so for this deep dive, we're really getting into the insights from Dr. Alexander Elder's book, El Nuevo Vivir del Trading.
Ah, a classic. The new trading for a living.
Right, and it's a big book, covers a lot, systems, risk management, everything.
It really does.
But today, our mission is to pull out what Dr. Elder sees as the absolute cornerstone.
Which is?
The psychological stuff. The behaviors that shape our decisions when we're actually in the market.
Okay, good focus. And this is really for you. The learner, someone who gets that true mastery, means understanding the principles underneath.
Exactly. We're not just, skimming tactics.
No, we're digging deep into the why. Why do people make winning trades? And maybe more importantly, why the losing ones?
The goal is to give you a more profound, informed perspective.
So, El Nuevo Vivir del Trading, it really puts psychology front and center, doesn't it?
It really does. From the get-go, Elder argues it's not just a piece of the puzzle.
It's the main piece.
The predominant one, yeah. He says most traders fail not because their strategy is junk, but because they ignore their own psychology.
And you have to consider his background, right? He was a psychiatrist.
That's a key point.
So he brings this really unique lens. He understands human motivation, anxiety, and crucially, our knack for self-sabotage.
Self-sabotage
Yeah.
in the markets.
Yeah, bringing that understanding to the, let's face it, often irrational world of trading.
And the numbers seem to back him up. Elder points out that something like 85 to 90% of investors
Get it wrong.
get their market assessment wrong.
Yeah.
Think about that. The overwhelming majority.
Wow. That strongly suggests it's more than just bad analysis, doesn't it?
That's right toward psychology.
Absolutely. If that many people are on the losing side, you have to ask why. What are these inherent psychological traps?
Which brings us to what the book calls auto-sabotage.
Self-sabotage.
Yeah. A term that, let's be honest, hits home way beyond just trading, right?
For sure.
But in the market context, it's all the ways traders unintentionally shoot themselves in the foot.
Undermine their own success.
Exactly. And for you, the learner, trying to get a full picture, just recognizing these tendencies can be, well, powerful.
It helps you navigate without letting emotions just take the wheel, especially when you feel overwhelmed by all the information flying around.
So what does it look like? What are examples?
Well, the book gives classic ones. Holding on to losing trades way too long, just hoping.
Hope strategy.
Or the opposite, grabbing tiny profits instantly because you're scared it'll reverse.
Cutting winners short.
Mm-hmm. And impulsive trades. Just jumping in based on a feeling, not a plan. That's huge.
Dr. Elder uses this really vivid analogy, the demolition derby.
Oof, yeah.
He suggests some traders seem almost determined to crash their account.
Like it mirrors self-destructive patterns elsewhere in life.
It's a strong image, but it really drives home how our own internal stuff can be our biggest enemy. So how do we avoid, entering the derby?
Right, the million-dollar question. The book really pushes the trading diary. Hard.
Okay, not just logging trades, though.
No, it's about honest self-assessment. Tracking entries, exits, yes. But crucially, why you made the decision. What were you thinking or feeling? You start seeing patterns. Successful ones, hopefully, but more importantly, those self-sabotaging ones we talked about.
So reflection is key.
It's the absolute first step to breaking those negative cycles.
Now, here's where Elder makes a really interesting connection. He draws parallels between creating struggles and addiction, specifically Alcoholics Anonymous, AA.
Yeah, that often raises eyebrows initially. Trading and alcoholism seem worlds apart.
But the underlying psychology
Can be surprisingly similar. What really resonates is the potential for, massive loss. Financial, personal.
both can spiral, right? Impacting everything, money, relationships, well-being.
Which shows the powerful grip these impulsive behaviors can get.
And in AA, there's the concept of hitting bottom, that painful point where you realize things are unmanageable.
Elders suggest traders can experience something similar, a hitting bottom moment.
When the losses just hurt so much.
That it forces a total rethink. A fundamental change in approach becomes unavoidable.
And just like in AA, the first step is admitting there's a problem.
Exactly. A trader stuck in losses needs to face their mistakes, take ownership, stop blaming the market or their broker or whatever.
That honest admission, tough as it is the start.
It's essential for recovery, for improvement.
The one day at a time idea from AA, that seems applicable too, doesn't it?
Very much so. Managing those impulses. Resisting the urge to chase losses or get greedy.
Just focusing on making one good decision now, then the next one.
Breaking down that intense market pressure into manageable bits. And the book also mentions the value of maybe a sponsor or a mentor.
Like an AA.
Yeah, someone experienced for guidance, support, accountability, someone to call you out maybe.
Keeps you honest. Okay, so building on this, Elder talks about Losers Anonymous.
Right, not a real group.
No, it's more a description of the mindset of traders who just consistently lose.
And it's characterized by denial, often.
Blaming everyone else.
Externalizing, market manipulation, bad luck, the news, anything but their own flawed approach.
And always looking for the magic bullet.
Constantly searching. The perfect system, the guru with all the answers, instead of doing the hard work of self-improvement and building their own edge.
So just like needing to hit bottom with addiction.
Elder stresses that traders need to hit bottom as a trader.
That touching bottom phrase he uses.
It's that really painful, visceral experience of losing significant money. That feeling, if you learn from it, can trigger real change in a way just reading about it can't.
Which leads us to, well, the external world again. The influence of the market crowd. Psicología de masas, he calls it.
Mass psychology. It's crucial to remember prices aren't just numbers. They reflect the collective mindset.
All the hopes, fears, biases of everyone buying and selling.
Exactly. And that collective mindset can be incredibly powerful and often wrong.
So the book warns against just following the herd.
Strongly. It hammers home the need for independent thinking. If you want consistent profit, you can't just do what everyone else is doing.
Like that image of everyone running for one exit in a fire.
Yeah, the person who stops and thinks might find a better way out.
He brings in the bulls and bears, obviously.
Alcistas and baixistas. But not just as directions, right? He ties them to emotions.
Greed driving the bulls.
And fear driving the bears. Understanding those undercurrents gives you insight.
And the general public, as he points out, tends to jump in late, right? Buying high when things look amazing.
And then panicking and selling low when it turns ugly. Classic emotional trading.
Why is it so hard to resist that, though? That urge to join in?
Well, a big part is FOMO, fear of missing out.
Yes.
It's powerful. It can just switch off your rational brain. You see something moving, everyone's talking about it. You jump in so you don't get left behind.
Even if your own analysis says, wait.
Exactly. It taps into our social wiring. And he also mentions the market gurus.
The ones promising easy riches.
Yeah, and how they tend to pop up and fade with the market cycles, feeding that FOMO and desire for easy answers.
Which logically brings us to the need for independence. La independencia.
Absolutely critical. You have to develop your own plans, your own strategies, not just piggyback on someone else's tips or calls.
Build your own compass.
That's a great way to put it. Nurture that ability to think and act for yourself in that chaotic environment. Elder uses the Ulysses and the sirens analogy.
Oh, from mythology.
Yeah. Ulysses had his men tie him to the mast so he wouldn't steer the ship onto the rocks when he heard the sirens' irresistible song.
So traders need self-discipline to resist. What? Tempting but dangerous influences.
Exactly. The siren call of a hot tip, the comfort of the crowd doing the same thing, things that can wreck your account.
Because those impulsive actions, driven by groupthink or FOMO,
they can blow up even the best laid plans. Independence requires real self-awareness and sticking to your guns, even when it feels uncomfortable or lonely.
Okay, finally, let's talk about the emotional side directly. Trading emotional.
Emotional trading, because let's face it, despite needing to be rational, trading can be exciting.
Oh yeah, thrilling even, like gambling almost.
It can trigger similar reward pathways in the brain, definitely. That excitement, that buzz.
But that's the danger zone, right?
Precisely. That emotional pull is often detrimental to consistent success. You get these intense highs from wins, crushing lows from losses. It's a roller coaster.
And you can't make good decisions on a roller coaster.
Exactly. The key takeaway is cultivating that calm, rational mindset, being able to step back, observe, and execute your plan overriding those gut emotional reactions. Be detached, not reactive.
Okay, so let's try and synthesize this a bit from Dr. Elder's perspective.
I think the main thing is psychology isn't just, a side issue in trading. It's the foundation.
The bedrock.
Yeah. We've looked at how dangerous self-sabotage is and how important it is to spot it and deal with it.
Using ideas, interestingly, from addiction recovery.
Right, those parallels are quite powerful. And then there's the huge influence of the crowd.
And the absolute need to think for yourself, to be independent.
You got it. Those are the core psychological pillars.
And understanding these, getting to grips with them, as Dr. Elder lays out, gives you, the learner, a real edge.
It really does.
Yeah.
It helps you see the internal battles that trip up so many traders and gives you the tools, self-awareness, discipline to navigate them better.
So here's a final thought to maybe chew on.
Okay.
Thinking about all these challenges, self-sabotage, the pull of the crowd, managing emotions, which one resonates most with you personally?
Interesting question.
And how could actively working on that specific challenge change your approach? Not just to trading, maybe, but to anything involving risk and making decisions under pressure.
Because ultimately, this isn't just about trading charts, is it? It's about understanding human behavior when the stakes are high, in any field.